All right, hello. We are going to be talking today about how you apply some recent AD&AS factors into questions in Area Study 2 for Unit 3 of BCE Economics. This is really important. This has come up a few times. A few students have asked me about it really recently. But sometimes on SACs, and especially the exam, often you're giving data, and the data is of an aggregate demand or aggregate supply side factor or a government macroeconomic goal, and you're expected to use that data to apply it to the theory that you know and use the information and statistics there to answer questions. So we've done a little bit in the past about how to structure answers based on AD&AS factors, and there's been a few sample answers in the past. Today we're specifically going to bring in data as well. So if you have data, how you should use that and what that does mean when you're using it in these SAC questions. So I've got my drawing tablet here, so I can do things as we go, but then hopefully this will clear up some of those areas and help get you those little extra marks that will help you overall. So some key tips. These are the same as last time we went through this in Area Study 2A, but there's a set structure to answering AD&AS focused questions. So that's going to come up on the slides after this. We're not going to spend much time on it because if you want to spend time on that, go back to the previous video about Area Study 2A structuring stack style questions made by a friend from another school. But you should follow that structure to not lose any marks. And you should always describe the AD or AS factor you're talking about first. So that's one thing that's come up a little bit for me lately that you need to do. It's like if later on we're going to have talk about business confidence and stuff like that, you should always kind of describe that factor and its change first to then give real focus to the rest of your answer. Because if you don't do that, we always used to talk about it and saying, assume the examiner at the end of the year marking your paper is an idiot. They're not, they're economics teachers, they're very experienced, they know what they're doing, but you need to really describe it to them. So if you use a factor that's not in the study design but is correct, explaining it to them to a degree they understand it and makes the rest of your answer make sense. Just saying business confidence has increased, if the person marking your paper doesn't know what business confidence is, it doesn't help them. They don't know what's going to happen with that. They don't know if the rest of your logic is correct or not. With AD focused questions, you should always focus on the components of aggregate demand that are impacted. So your C, I, G, X, and M, how they're impacted, and then whether that impacts or how that impacts aggregate demand overall. Then you would link that to the overall rate of economic growth or whatever goal you're talking about. So in this case, my focus here is going to be on inflation and full employment because that's what my class is up to working on. But you've always got to then link that back to your overall goal. If the question asks you specifically about the goal of full employment or the goal of low inflation, you should always define that goal too to give the parameters of what you're actually trying to achieve. If it just says the rate of inflation, the rate of economic growth, the rate of unemployment, then you don't need to do that. You just need to talk about how it impacts it. With aggregate supply-based questions, you should always focus on either cost of production or productivity or efficiency being positively or negatively impacted. So whatever factor you get, how does that impact cost of production or the efficiency for that business? Does that favorably or unfavorably impact aggregate supply? And then linking that then to how it affects the goal or the rate of unemployment. So there's some really important things that will help get you and really help structure your answers to get to the right points. So then we've got this here. So if you want to respond to an aggregate demand side question, you should define the factor or describe it. Provide links to the component of aggregate demand affected, whether AD increases or decreases, how businesses should respond. So normally if AD increases, we say that sends a signal to businesses to increase production. Then how that impacts economic growth, how that impacts unemployment, how that impacts inflation. So for example, if AD increases, that sends a signal to businesses to increase production. To increase production, they often need to employ more labor resources, therefore unemployment will fall. And then if you've got data there, use that data as well. If you don't have data, don't worry about it too much. With AS, define the factor, link it to cost of production or efficiency, identify firms are more or less willing to supply, and identify if aggregate supply increases or decreases. And then you then link that to whichever goal that it is. Then to get into some sample stuff. So we're going to look at this first question. We're going to look at three questions, one about wage growth, one about the exchange rate, and one about business confidence. So referring to the data provided, explain how a change in wage growth is likely to impact the rate of inflation. So we've got wage growth here. And as you can see, if we look at the last 2 years, so as always, the last 2 years, so we want to ignore anything before January 2019, as that's what we're measuring to, so we can cross this part out. So this stuff we don't care about. So in January 2019, it was 2.3, and now it is 1.4. An incredibly important thing to know if you read about it in my blog, which I posted earlier today on therunningeconomy.com. If wage growth goes from 2.3% to 1.4%, wages have still increased. We are measuring wage growth. So this is how much wages have increased over time. So for businesses, if wages have still increased by 1.4%, that still means cost of production has gone up. So anytime wage growth is above zero, if it is above zero, that equals bad for cost of production. So wage growth needs to be negative to positively impact businesses. We can get a little bit more complex with this, where often we look at wage growth in comparison to inflation. But if you just had this question like this, then technically wages have still increased, just at a decreased rate. And you could potentially talk about that in your answer. But either way, the cost of production for businesses still has gone up, just at a lower rate than it was going up in the past. So to look at where you get marks in this, so you describe what wage growth is and how it has changed. So you'd want to be able to say what wages are, what it means when they go up, and how it's changed based on that data there, or which is now up there. Explain the impact to cost of production for businesses for your next mark, and how that impacts cost inflation, because we're talking supply side, and the rate of inflation overall. Because we're not talking about the goal, you don't have to define the goal, just saying how it impacts the rate of inflation overall. So what we're going to do, just kind of dot point what a sample length would be. So if we have that first mark, you're going to talk about wage growth represents the cost of businesses paying their workers, etc. Wages, then you say wages have increased or have grown by 1.4% in the most recent measurement in January 2021. If wages have increased by that, this equals an increase in cost of production for businesses. And then this makes businesses less willing to supply, or they're going to increase their business increasing prices to protect their profit margins. I forgot how to spell profits for a second. And then that leads to increased cost inflation. Which means that we have an increased inflation rate. But the important thing here, and what people often stuff up on, is that they see this decreasing and say that that's actually good for businesses. And although technically it's better for businesses, it's not necessarily good, because wages have still increased. Wages increasing, technically negative or unfavorable for aggregate supply, and therefore you have to go in this direction. And so that is how that one works. Then we've got analyzing the recent change in the exchange rate on the goal of full employment for 4 marks. When you have an analyzed factor, it often means 2 effects or multiple effects, impacts. Obviously from here, the recent trend being that it has been appreciating. So hopefully you'll be able to pick up on that. But in this case, we're going to get into, in that sense of the analyzed, 2 impacts often means that how it impacts AD and how it impacts aggregate supply, and then linking both of those into the goal of full employment. So our structure here, or our sample marking guide. So 1 mark for describing the recent change in the exchange rate, so talking about the fact what an exchange rate is and the fact it's been appreciating, how that impacts aggregate demand and unemployment, how that impacts aggregate supply and unemployment, and define the goal of full employment and whether it's more or less likely to be achieved. This ends up being a really interesting one, because from an aggregate demand perspective, that is going to mean that an appreciated exchange rate is going to mean that there are more imports and less exports, which is going to lead to a decrease in aggregate demand. Whereas from aggregate supply, you're going to have a decreased cost of production as imported factors of production are cheaper, and therefore that is going to lead to an increase in aggregate supply. So there's opposite effects there. thing that you need to know, though, is that for the most part, the aggregate demand effects are going to outweigh these cost production aggregate supply type effects. So that's going to be a smaller proportion compared to the impact on overall demand. So you could say that, so for either of these, with the aggregate demand effect, if aggregate demand is lowering, that is then going to lead to increased unemployment. With the aggregate supply one, that could potentially lead to decreased unemployment as more businesses are willing and able to produce and will employ more labor for that. So if we were to break this down, you'd say exchange rate. So you describe exchange rate. So the rate at which one currency can be exchanged for another. You'd say it's been appreciating. And if you could work it out off the graph, you would say that's appreciated to about 77.5 US cents. Then you'd say the impact of an appreciated exchange rate on aggregate demand. So that is going to lead to more leakages in the form of imports and less injections in the form of exports, which leads to lowered aggregate demand, which means that businesses will respond to that by decreasing production and laying off workers, which leads to higher unemployment. Then for aggregate supply, it's going to lead to a decrease in cost of production for businesses who use imports as factors of production, which is going to increase aggregate supply. If aggregate supply increases, businesses are going to be more willing and able to produce. And that's going to mean that they may employ more workers and decrease unemployment overall. Define the goal of full employment, which is to maintain the lowest rate of unemployment possible without causing any unnecessary inflationary or external pressures, around 4.5% natural unemployment existing. So in that case, you'd say that, and you'd say that in this case, an appreciating exchange rate is going to have a greater effect on aggregate demand than aggregate supply, and therefore it's less likely that the goal of full employment is likely to be achieved based on this appreciating exchange rate. So less likely to be achieved. If you want to have a go at writing an answer to any of these questions and you want to send it to me, feel free. I'll give you feedback on it. So then we get into our last question, which is all about the recent change in business confidence and how that's likely to impact the goal of low inflation. So if you look at it here, we've got our chart from Trading Economics of the inflation of the business confidence rate, which is a survey done by the NAB, which basically rates how much businesses are willing to invest and expand in the near future, how they feel about their overall business. In this case, you can see that over the last year, business confidence has been increasing as we've recovered from the pandemic. So you have to describe what business confidence is and that change overall, and then what that's likely to mean. So if we get into where the marks are there, one mark for describing business confidence in the recent change, then you'd outline how this impacts the components of aggregate demand and AD overall. So that's going to be your increase in private investment, if that's the case, and therefore increasing aggregate demand. And then how that impacts the goal of low inflation. So you talk about what the goal is and whether or not it's more likely to be achieved or not. You'd say business confidence, describe it, and then you'd say has increased. And that'd probably include the measurement of what it's increased to. So it's increased to 15 index points. And then you'd say this means that businesses are more likely to invest and expand. This increases private investment spending, which is an injection to AD. And that then increases AD overall. So then from that, if aggregate demand increases at a rate faster than aggregate supply, this increases demand inflationary pressure. It's a lot to write very quickly. Inflationary pressure. which means we're more likely to move towards the goal of low inflation, which is for the general level of prices to be rising at 2 to 3% on average over time. And then that would give you all 3 marks for that. And that's essentially it for like 3 different questions of how to use data in responding to some of these aggregate demand, aggregate supply, and domestic macroeconomic goal-based questions. Hope this is helpful to you. The usual kind of end of video stuff. If you want any more help with economics type stuff, feel free to head over to my website in that general direction, which is therunnинgeconomy.com. There's a bunch of blogs there. I wrote one today about some really specific exam skill based stuff. There's a whole bunch of resources there if you want to bully your teachers into buying some of them to help you out for practice stacks and all those kind of things. If you want them yourself, send me a message. I can give you a discount for that if you are a student. All my videos are there for the most part. If not, check out the YouTube channel which you're potentially on. And hopefully that will help you out as much as possible as we move towards the last topic of Unit 3. On that, I hope you have a wonderful day, and I will see you next time. Bye.